All right, then there's some pressure today, but coming into the month, golly, semiconductors, look at this thing. Intel up 84%, Advanced Micro up 68%, Marvell up 62%. The list goes on and on. Some of the Packers up 23 and 15%. For the month. All of this, I think, for the most part, caught most analysts off guard. Interestingly, though, every firm here, particularly when it comes to Intel, was forced to raise their ratings, right? But what I also thought was intriguing about it, the vast majority of them still have neutral, equal weight, or hold. That's all you see. Neutral, 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 hold, hold, hold. Market perform, underweight. I mean, so the street, the experts, still not necessarily buying the Intel story. Now, my next guest did raise his target to 77, but it was 45, and yes, he maintains a neutral stance. Let's bring in now Gil Luria, head of technology research at DA Davidson. All right, so first, Gil, though, the report comes out. What part of it was most surprising for you with Intel?
The increases in CPU demand translated to record results for them in a matter of weeks and months. Let's not forget, CPUs were not in shortage even 6 months ago. It's when Anthropic introduced models that allowed agentic AI to expand, all of a sudden, everybody realized they need a lot more CPUs. And within the span of 1 quarter, that translated to record results for Intel, including them saying that they had to take CPUs that they had previously written off, which is to say they discarded, they turned around, took those back, and were able to sell them. That was the most surprising part of the report.
So I know reading a prior report, you're not necessarily a fan of the board, but what about the CEO, right? Lip-Bu Tan, he took Cadence up, like Cadence stock went up 2,300% while he was there. How much does that weigh in on your decision?
He has done a remarkable job. At the strategic level, signing deals with President Trump, Elon Musk, and Jensen Huang, all to become investors in him and in Intel and their technology is a remarkable run. And he's signed other great deals. And he's also started gaining some success at the operational level. The other notable item last week from Intel's results was that they're getting higher yields, that more of their chips are usable, which is really the key determinant of gross margins. They were able to get gross margins from 35 to 39%, not just because of higher prices, but also based on better yields. So he's doing a remarkable job. The reason you're seeing some of us sell-side analysts be a little skeptical is that he has a really tough road ahead. That turning around an operational company with so much manufacturing complexity into a higher margin business is a really tough task. Let's not forget, they still lose many billions of dollars on the manufacturing side, and it's unclear that that's going to go away anytime soon.
I want to ask you about two small hardware names I saw on your buy list. By the way, very refreshing. I'm always looking for new, fresh names. I remember last Friday, not this Friday, but 2 Fridays ago, this blaze took off like crazy. It went up, huge volume, BZAI, also Boost Run. Talk a little bit about that and give me a little time too, because I want to ask you about software, your software bets too.
Yeah, so Blaze makes other types of GPUs for the edge computing. So putting them in video cameras so the AI can happen on the camera. It's much more efficient for inference than NVIDIA GPUs. So they have this really nice niche that they're developing, and they're growing very, very rapidly right now as they sign more relationships. Boost Run is a neocloud. That's a data center company at a much, that's still a small cap because they're an upstart. And that's a unique thing these days because some of the other neoclouds have gotten so big and so dependent on the large customers. That's what's unique about Boost Run is that they have a lot of smaller customers. They have much more of a roadmap to be able to grow their current customer base, and they're led by a CEO who has a lot of experience building data centers. So that's what makes those two companies very special right now.
I love it, man. I'm always looking for these names that can go up big, right? And, you know, great stuff. Hey, I got just a minute to go. I'm sorry, we're crunched for time, but I do have to ask, you've got a lot more buys on software names than hardware names. In fact, I think you only have 2 major software names that you have a neutral, Salesforce and Palantir. So I'm assuming you think this not much to do about nothing, but it's overdone, the software, the SaaS apocalypse thing.
I actually still think semis have more upside. They have higher growth rates. They have more upward earnings revisions. Within software, we have to be very selective. So we're just covering the stocks we like. We don't cover a lot of stocks we don't like. We like Microsoft. We like Oracle. We like Snowflake, Datadog. These are all companies. The one thing those companies have in common, they're going to have accelerating growth this year. And it's very hard to say that a company is losing in the era of AI when their growth this year is higher than their growth last year. So we're selective in software. We do think semis are going to do very well as a group.
I'll note you also like SoundHound. We don't have time to go through it, but that's a name I've been watching for the last 3 or 4 years as well. Gil, thank you so much, my friend. Let's do it again soon.
Thank you.
All right, folks.